Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal, and here's a look at the stories for the day. Indian startups are shedding the extra flap put on during the days of easy money. Layoffs and cost structuring are the only way out for them now. Some of India's largest startups are in the middle of a transition. They're shifting from growth to profitability now. Our today's segment takes you on this transition path.
A small industry of sorts seems to have popped up, which is thriving on layoffs now. Such is the scale of people being fired from startups. There are startups which are now helping companies in smooth layoffs, making it less painful for the employees. So, why did things come to such a pass? Skeptics have for long been questioning the deep discounting, high cash burn, and growth at all costs model of Indian startups. But there was no stopping for them. Now, the recent funding slowdown and market scrutiny appears to have enforced some discipline among them. On the 1st of August, Zomato reported a consolidated loss of 186 crore rupees for the quarter ended June. Thus, the online food delivery platform's losses have narrowed 48% from the previous quarter's figure of about 360 crore rupees. And how did Zomato achieve this? CEO Dipinder Goyal said that over the past few months, Zomato's focus on profitability has sharpened amid the change in market context, and it is allocating resources with a long-term view on sustainable growth and profits. The goal comes along with sweeping changes. Having internally rebranded itself as Eternal, Zomato plans to move to a structure where it would have multiple CEOs running each of its businesses, which are Zomato, Blinkit, Hyperpure, and Feeding India. While key details are still missing, this appears to be an attempt to set up a corporate umbrella structure where the parent company is able to diversify revenue streams and derive larger profits from multiple subsidiaries. After the COVID-19 pandemic struck, Swiggy downsized its cloud kitchens and laid off 900 employees, citing its focus on growth and profitability. This year, Swiggy is introducing new private labels in the food business segment. While it is launching new cloud kitchens for these brands, it is also rationalizing costs and seeking optimization. In fact, Swiggy is reportedly being very cost conscious with this exercise. In December last year, Swiggy co-founder and CEO Sriharsha Majeti said that the first COVID lockdown forced the company to make hard choices, which accelerated it along the path to profitability. In fact, he said that Swiggy's contribution margin was healthier than pre-COVID levels. He added that the food delivery category would turn profitable in the next 2 to 3 years. In July, 197 Communications, the parent company of Paytm, presented the annual report for FY22 for the first time as a public listed company. It said that the company's aim was to achieve operating profitability by the second quarter of FY23. At that time, Vijay Shekhar Sharma, the founder and CEO of Paytm, had said that there had been rapid growth in payments and a significant scale up in the lending and payment devices businesses. Clearly, these three large startups, along with select other names, have at the very least reoriented their priorities towards profitability. But what are the drivers of this transition and the challenges involved?
I think most of these startups, have kind of realized that they will not get a multiple just by pure cash burn, and these are businesses which is not come 1 year, 2 year horizon. Of course, the pandemic led to acceleration in a lot of digital trends, which kind of supported them, and that's the reason they've taken this entire call around profitability now because valuation multiples are kind of converging in the internet space. The more you delay the profitability path, so I think have taken a conscious step in terms of profitability. So some would have taken the form of reduction in headcount, some would have taken the form of reduction in marketing expenses, and I think it makes all the more sense because now these businesses are largely 5 to 7 years in terms of time frame from where it started. But it is not going to be easy to sustain the profit and the growth, because if you clearly look at what they were doing all these years, is that they were compromising on the profit to achieve that 25-30% kind of growth rate. So now, with this entire focus coming in, they might even achieve profitability. Like, Zomato, they did a break even in the food business, which is a very good sign, which is there. But we'll have to wait and watch whether or not this impacts growth rates, whether you call it fintech, whether you call it quick commerce. I think there it's not going to be easy to sustain the growth, because that those markets are fragmented. There are multiple players chasing that high growth which is there. So I think this path to profitability, whether or not someone wants to do it or is able to do it, really depends in terms of the market structure, which is a major thing here. You will see things changing when people are being asked to pay for delivery. Unit economics turn favorable, because you really cannot have this scenario for more than 3 to 5 years where the company is just burning losses, company is paying for delivery, company is kind of giving discounting. End of the day, the customer has to pay, and India as a market is price sensitive. There's no doubt about it. So when it comes to the customer paying for delivery, or for the customer paying the full charge or the full price of the product, there is going to be some impact in terms of the consumption patterns of the customer.
According to Karan Taurani, dominant startups in highly consolidated industry segments like food tech and e-commerce are best placed for pursuing profitability without significantly sacrificing growth. Finally, there is increasing regulatory scrutiny of internet companies, which is both a motivating factor for startups to pursue profitability with renewed vigor and a hurdle that will have to be overcome during their journey.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Innovation has also been the key to the success of Adar Poonawalla. He has taken Indian vaccines to the US and European markets. In an interview with Business Standard's Sohini Das, Poonawalla tells about his plans, which include mass production of malaria vaccines, nasal flu vaccine, and exploring a vaccine for monkeypox too. Let's listen in to the interview.
So you're the only company from India as a vaccine maker to be approved by the US FDA and the EMA both,
That's
and
correct.
to be supplying to both the countries.
Absolutely.
So how does it open doors, for you? After the pandemic, the acceptability must have risen, and how do you want to build on that?
Yeah, so I mean, Indian companies haven't been able to penetrate those markets, and because of artificial barriers in those countries. But now we've demonstrated that we have the quality and capability and the ambition to do that. So that's opened up doors for new technologies and new products also that we could not make initially over here. So it's a major milestone for our industry. So we're very proud and happy. And I hope that other vaccine companies also in India can reach those milestones.
Could you also talk a little bit more about the pipeline? I think the malaria vaccine is being touted to be the game changer with the kind of initial clinical trial results that are there. And obviously, if Serum is making it, we're expecting it to be affordable. So what are your plans? What kind of scales are you looking at?
Well, we're hoping to roll it out in hundreds of millions of doses from the middle of next year, subject to all our permissions and licenses coming through, both in India and at the WHO level. And as I said, with HPV, we've got a 5-in-1 meningitis vaccine as well to protect the sub-Saharan belt and the travelers to the Hajj areas. So, you've got all these products in the pipeline, and along with some others which will go to Europe and the US as well.
How are you preparing Serum for the next stage, honestly, in terms of technological advancement?
So I've always dreamt of having alternative delivery systems to deliver our vaccines effectively. We have an oral vaccine for children, which is rotavirus. So you do away with needles and injections. We have our flu vaccine, which is a nasal vaccine. We're working on patch technologies where you just put a patch on your arm and the vaccine can be absorbed by your body, but that is in early stages of clinical development. So, it's an evolving process. Pre-filled syringes is just an alternative where, it's ready to use, so it's easier for a doctor or a nurse to just open the packaging and just administer it. You don't have to take the product out of a vial, or in a lyophilized product, you have to reconstitute it with a diluent and then draw it out into a syringe. So it's a ready to use product, but it costs more. So it'll be a sort of niche product for the higher markets, including some of them in India.
So how much investments you've already made and how much you intend to make in the next 2 to 3 years?
Well, totally, Serum has invested around 25,000 crores in capex over the last few decades. Around 10,000 crores of that investment was just in the last 5 years, including during COVID. So that just gives you a scale and perspective of what we've invested. Look, I was just talking to someone else recently. We could have grown much faster had we been listed or taken private equity money. But my father and I always chose to maintain our flexibility in decision making. And so we grew organically. It took time, but that time gave us the ability to build a solid reputation of reliability, of quality, timely supply, and all of that.
You also mentioned you want to get into mRNA. I think this global pandemic facility will have all kinds of platforms. So for that, are you going for a tie-up with someone who already owns the technology, or you're trying to grow it in-house? And what about the other platforms? Does Serum have all of them, like a viral vector you've already used, inactivated? If you could,
Yeah, so we've got, a whole choice of different technologies. Some technologies work better against certain viruses. We've seen that even in the pandemic. We've tied up with Greenlight, which is a company that develops and can develop messenger RNA vaccines in a matter of 3 to 4 months. They have that capability. We're even looking at doing something on monkeypox with them, for example, and other diseases that we hope to make vaccines in the future. It is a technology which needs still some time because you need to make these products thermostable. Okay, in a pandemic, when we were in a rush, it was okay, but going forward, immunization programs need vaccines that can be stored at +2 to 8 degrees and not -20, -70. That's very important, especially in the hot countries that we deal with. The temperatures are very high. So we've got so many other live attenuated platforms which we use for the MMR group of vaccines, and you've got the traditional bacterial vaccines also, which are the whole cell vaccines that we use for tetanus and pentavalent and all of that. So really we've got the whole gambit and choice of what technology to use, but it's very important to choose the right technology for the right disease.
Thank you, Adar. That was very insightful, and we look forward to hearing from you more often.
Thank you.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Poonawalla had recently asked Elon Musk to invest in India if his Twitter deal does not go through. The SII chief promised Musk on Twitter that it would be the best investment he would ever make. Meanwhile, the Indian rupee has reversed its slide recently amid a weakening in the US dollar index and a halt in foreign investors' selling spree. Our next report dwells into the outlook for the currency and the sectors that can benefit the most from the current trend. From a record low of 80.06 per dollar touched in late July, the rupee has pulled back to 78.79 per dollar levels. The reversal has been aided by a break on foreign investors' exodus, weak crude prices, and the dollar. For instance, the US dollar index has cooled off to 106th level from its 20-year high of 108.5 touched last month. The move came as the US Fed downplayed recession fears and hinted at a likely slowdown in rate hikes. However, any decisive move in the currency is dependent on foreign flows and the RBI's rate hike trajectory, analysts say.
First of all, we look for the dollar inflows. So if you have seen that the FI have been turning on a buy side, that is a positive side for the rupee. Apart from that, we see that the good monsoon has given some kind of relief to the RBI in front of the inflation. So inflation could come down in coming months. So that will give the a boost, or you can say some support to the RBI to not to go too much hawkish following the developed market central bank. So that's another point. Apart from that, we have seen that the crude oil prices has been stabilizing around 110 level. So that is the another factor. So these are the few factors which are supporting the rupee. The only thing which remain on a concern side will be the geopolitical tension.
Besides, analysts flag India's strained external position as another dampener for the currency. A note by Bank of Baroda says, trade deficit continues to be at a record high, which will put pressure on the balance of payments. Imports may moderate due to softening global commodity prices, but exports will be muted amid weak demand in key markets like the US and Europe. Sharing similar views, Amit Pabari of CR Forex Advisors expects the recent pullback to be unsustainable. According to him, the recovery in rupee was driven due to triggering of stop losses as the majority of the market's punt was long on US dollar, and short covering of the same aggravated the move. The currency will likely bottom out and resume its upward journey towards 79.5 to 80 levels. That said, analysts believe that any further relief in the rupee will be most beneficial for oil marketing companies, which can offset the losses taken on the marketing margins. Traditionally preferred IT and pharma companies also remain preferred bets given their strongly hedged positions against currency volatility.
So I think historically speaking, markets look at IT, pharma as sectors to look at in this kind of a scenario. Even given the opportunity that lies ahead with export potential, I think specialty and agrochemicals companies should also do well, given the China Plus One policy and the performance of the specialty and agrochemicals sector in terms of numbers for this quarter and of course going forward for the current quarters to come through.
Today, besides corporate earnings, the Bank of England's interest rate policy outcome will also be on investors' radar.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Just like the equities, experts advise caution in purchase of property too. But how will you know if the house you are planning to buy is free of any litigation or any other problem? An Encumbrance Certificate will help you in that. Let's know more about it.
Home buyers should move forward to purchase a property only if they are absolutely sure that it is free from legal or financial trouble. But how do we know if there are any claims or charges against the property? An Encumbrance Certificate will certainly help in this regard. An Encumbrance Certificate tells the buyer if the property is clear of charges. These charges could be a mortgage loan, liens, a third-party sale, or multiple transactions on the same property. After knowing the encumbrance history of the property, the buyer can safely proceed with the transaction. An encumbrance certificate will caution the buyer beforehand about the property. For instance, the buyer might not be sure about the third-party rights on the property or has doubts about the seller. He or she can then get an encumbrance certificate to verify if the property is free of litigation. No, it is not mandatory to get an encumbrance certificate. However, if the buyer wants to apply for a home loan, or if they would like to use the property as collateral to get a loan, the lender might ask for an encumbrance certificate. The encumbrance certificate is issued by the Registrar of Assurances or the Sub-Registrar's office where the property has been registered. One needs to submit an application for an encumbrance certificate by paying a nominal fee. The applicant may also specify a certain time period for which he needs the certificate. It is usually issued within 15 to 30 days. If the property has any financial or legal claims against it, the encumbrance certificate will reveal it. However, if the property is free of encumbrances, a nil encumbrance certificate is issued.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Experts also suggest that people should check if the property has a clear title and is in the name of the seller. They advise against trusting power of attorney as it can be fabricated. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.